Warner Brothers Discovery is down 17% after the reported earnings. In April, AT&T sold their warnermedia assets and spun them off into a separate entity with Discovery Plus. This is probably good news for AT&T investors now, as John Stankey, the CEO of AT&T, looks like a genius. And now, David Zaslav, the CEO of Discovery, is now blaming this on AT&T's projections for WarnerMedia. So today we're going to be talking about the drama, my thoughts on Warner Brothers Discovery, and my updated thoughts on AT&T, and much more. If you're new here, my name's Ryan. I'm 16 years old. I do dividend growth investing for the long term. It would mean a lot if you could subscribe, smash the like button while you're at it, turn on post notifications, join the Discord link in the description, and of course, roll the intro.
Jeepers! Jinkies!
Hello, I like money.
Alright, so right when they spun off these shares, I sold them at around $25 per share. I didn't feel like holding the stock in case something like this happened and I would be holding it for the next 5 years just as it became flat. So I used that money and just bought back into AT&T to get some extra dividend income. But the company reported earnings on Friday and they weren't that good, to be frank. They announced that they would be combining HBO Max and Discovery Plus into one streaming service. Warner Brothers Discovery also announced they lost $3.4 billion in revenue, which is obviously not good news. They also had a big failure earlier in the quarter with CNN Plus, which is supposed to be streaming service for CNN. Apparently, nobody got the streaming service, so they just completely scratched that out. But keep in mind, every great business has had to scratch out and had failures in the past. Also, Warner Brothers Discovery lowered all their forecasts for the future and their EBITDA forecasts. Quite frankly, the stock is a mess right now. I feel also right now that the company is scrambling as they didn't expect this. CEO of Warner Brothers Discovery, David Zaslav, is now blaming these issues on previous management and a higher than expected forecast from the previous management. Quite frankly, I find this to be BS. After Friday's tiny 17% drop, the stock is now down 55% from when it IPO'd. And you guys thought AT&T stock is bad. Not to mention they don't even pay a dividend. Guys, this is from Joseph Carlson's video, and he uses Qualtrim. It's a really good software, I'm sure. Go check it out. But here you guys can see the cash and debt ratio. You guys can see here that their cash and debt has been around like $20 billion, but here we had a huge spike. Now they're sitting at around $50 billion in debt, and they don't even have the cash to back it up. Here you guys can see the free cash flow per share, and it's at a horrible 35 cents right now. Honestly, this is terrible, and CEO John Stankey of AT&T is looking like a genius right now. So as I've mentioned, they don't have a lot of cash, they have a lot of debt, so I feel that Warner Brothers Discovery is going to be in building back mode for a while. I feel right now David Zaslav did not expect this to happen, and he's in a big panic mode, and I feel that could just go throughout the culture of the company right now. This is not what I want in a long-term dividend investment. Now, here's an interview with an analyst on the situation, and I think he paints a very good, perspective of where David Zaslav's at right now.
Sort of the AT&T projections as unreliable, not to mention the overall macroeconomic environment. And so what they're effectively doing, Joe, is they're scrambling to figure out, because cash flow is coming in far below expectations. They've got a lot of debt. So they're sort of finding new ways to generate dollars. You mentioned an ad-supported streaming service.
I think with that said, the Warner Brothers Discovery is being really undervalued right now. But with all that said, it's undervalued for a big reason, for that being a really low-quality company, in my opinion. So obviously, I'm not going to be buying it, but it will be interesting to see if there will be any conflicts or any, lawsuits or anything between Warner Brothers Discovery and AT&T after this, lowered projections. I feel there may be some tension right now going on between Stankey and Zaslav, and it will be really interesting to see how it will go for the next couple of years. So right now, I'm not touching Warner Brothers Discovery. But with AT&T, it is on a bit of a dip recently after they reported earnings, and I think that's at a good value right now. But will you be buying any, Ryan? I don't know. You're going to have to join the Discord to see that link in the description. Also, check out my portfolio updates every month. AT&T is generating a lot of free cash flow and revenue right now with their telecommunications business, which is what I'm investing in it for. Slow, large, and steady growth is what I want when I'm a company, and they're producing that right now. Right now, T is trading at a 6% dividend yield, which is almost back to pre-cut levels. I'm not really looking to buy any right now because I think I already have a good enough position in it. But if it keeps dipping like this, I might have to pick some more up. I think AT&T is on a much better path right now than Warner Brothers Discovery, and looking back, it was a steal for AT&T to spin it off. I want to thank you for making it to the end of the video. It would mean a lot, again, if you could subscribe. I'm trying to grow this channel as fast as possible. It's fun seeing it grow. It's really fun. As I said, make sure to smash the like button while you're at it, turn on post notifications, and of course join the Discord, and of course, do Dividend Stocks Hot Drugs. Have a good one.